Hello everyone and welcome to another episode of the Technical Analysis for Beginners. My name is Mr. Crypto Tracker, and in this episode I'm going to talk about a very important concepts in economy and also in financial markets: supply and demand. In previous videos, I talked about the market structure and how you can identify where the price is on any chart. Is that in a downtrend, in an uptrend, or it's in a range? Now it's time to learn a very important concepts in economy in general and in financial markets in particular: supply and demand. The law of supply and demand combines two fundamental economic principles describing how changes in the price of a resource, commodity, or a product affect its supply and demand. As the price increases, supply rises while demand declines, and conversely, as the price drops, supply constricts while demand grows. So before we jump into the details, please make sure to subscribe to the channel if you didn't do it so far, and also turn the notification bell on to get notified when a new video comes. Let's start with the law of demand. The law of demand says demand for a product changes inversely to its price. In other words, the higher the price, the lower the level of the demand. And as you can see here, as price increases, the demand decreases. And also as price decreases, demand increases. This is a very general definition of the law of demand. But let's take a look at the law of supply. The law of supply relates price changes for a product to the quantity supplied. In contrast with the law of demand, the law of supply relationship is direct, not inverse. I mean, the higher the price, the higher the quantity supplied. And lower prices mean reduced supply, considering all other factors keep equal. So what are supply and demand zones? I want to particularly talk about financial markets. So before we jump directly into learning how to identify the supply and demand zone on a price chart, you need to fully understand these concepts. So let's learn about each zone before moving forward. Supply and demand zones are a popular technical analysis which used in day trading. So the zones are the periods of sideways price action that come before explosive price moves. So a supply zone forms before a downtrend, and a demand zone forms before an uptrend. Let's go on a chart and talk about these concepts more in details on a chart. This is a chart of a cryptocurrency, a Polkadot. And as I said, a supply zone, here we have a supply zone, forms before, this is the supply zone, forms before a downtrend. Here we have a downtrend. And a demand zone, as you can see here, forms before an uptrend. You can see an uptrend here. So what is a supply zone? I'm going to talk about supply zone from the perspective of technical analysis, specifically in financial markets, how we can identify these important zones and how we can trade them. So the candlesticks or bars that make the origin of a strong downtrend are called the supply zone or distribution zone. What I mean here, we have a very strong candle here, and this, let me zoom a little bit, and this green candle is the origin of this move to the downside. So here we can say this area is our supply zone. So a supply zone is the price area at which the traders usually sell their assets. This area is presented above the current price. For example, if the price is here, usually the supply zone is above the current price, where the highest selling interest or potential exists. So, for example, the price right now is here, and the supply zone should be above the current price. For example, here in this area, let me show you here in this area, we can say we have a supply zone. So this chart shows the price reaching a specific zone here, waiting for some time, and then going to the downside. This cycle will keep repeating itself until all unfulfilled orders get filled. There are a few, not a few, there are some orders here. And until all those orders get filled, price will stay here and then it starts going down. So this is for supply zone. Let's take a look at demand zone. The candlestick or bars that make the origin of a strong uptrend are called the demand zone or accumulation zone. Here, for example, we have a very strong move to the upside in this area. And here is our origin of this move. So we can mark this area as the demand zone. So for marking the supply and demand zones, we have different techniques to mark them, but what you can see here is just a general form of identifying supply and demand zones. Each methods, they have different rules. For example, if you are working, if you trade based on price action, and for example, in price action, if you follow the RTM methods, they have different rules. If you follow the smart money concepts, they have other rules. So I'm not talking about how you can specifically identify these areas. I will talk about these subjects in coming videos. But here in this video, I'm talking about the general idea of supply and demand zones. So so here we have a very strong move to the upside, and we can say this area is our origin of this move, or we can go even lower and say this area is our demand zone for this strong uptrend. So a demand zone is the price area at which the traders usually start buying at that area. This area is presented below the price, the current price, where the buying interest or potential is the highest. This means the demand zone has many buyers available due to many buying orders at that level. So look at here. Here is the current price, and here below the current price we have a demand zone here, or you can identify another area like here as the demand zone. Here would be, you can say here is another demand zone. It doesn't matter. So you need just to learn the general idea of a supply and demand zone in this video. So this is what you need to learn about supply and demand zone. I highly recommend you to go on different charts and try to mark the supply and demand zones here. For example, here we have another supply zone because here is the turning point of this strong move to the upside. Then the price stayed here for a while. If we go to daily time frame, let me go to daily. Daily time frame, you can better see it probably. Yeah, so here the price stayed here for a while and then it decides to go to the downside. So here we can say we have a supply zone, and then you can see the price showed a reaction to this supply zone. Okay. So far you learned the general concept. Let's go to the next step. How to identify supply and demand zones on any charts. Identifying market imbalances is the first step to finding supply and demand zone. In simple words, market imbalances refer to a big price shifts in one direction, either in upward or downward. And it's based on the fluctuating supply and demand. So when the demand is more than the supply, the price rallies up, which represents by a big green candle. Here, for example, in this area, you can see a very strong green candle. It shows the demand is more than the supply, so the price starts going up. And when supply is more than the demand, the price drops, which represented by a big red candle. For example, here you can see this big red candle, and it says the supply is more than the demand, so price starts going down. So these big candles are actually the price movement, which showing us the market imbalances on the chart. The key point to remember while finding the market imbalances is to keep an eye on big candles, only big candles. Also, we call those big candles as explosive price candles or extended range candles. Let me type it here for you. Extended range candles, or we call them ERC candle. So here, for example, in this chart, you can see this is an ERC candle. This would be another ERC candle. This would be another ERC candle. So these candles are important for us. And so now you can easily find market imbalance on the chart. And you can move forward to follow 3 essential steps to identify supply and demand zones. So let me type these 3 steps for you here. You can take a note if you want. And then we will talk about these steps on charts. So step number 1 is spot the current price. This is the step number 1. We have to spot the current price. You need to spot the current price on the chart, then look at the left side of the chart and find a big, strong lineup of candles, either moving up or moving down. Here, for example, we are here, and you have to take a look on the left side to see what's happened in this part of the chart. The step number 2, step 2 is find ERC candles, so extended range candles. So here, after we take a look at the left side, then we are looking for extended range candles. So you can identify the ERC candles by their long bodies with little to no wicks. And remember that if any candle has an equal size of wicks or shadows and body, it's not an ERC candle. This is how ERC looks on a price chart. So for example, here we can say this is an ERC candle. As you can see, there is no wick, no shadow, and Also, we can say this is an ERC candle. The lower shadow is a little bit long, but the body is strong enough. And also here we have another one. Here we have another one. Here, this is a very strong candle. So this is the second step to find the ERC candles. And step number three, step three is identify the origin of the price movement. So step three, identify the origin of the price movement. Finally, in this step, you need to identify the origin of the price movement on a chart. As you can see in this chart, we have a very strong movement from here. It starts from here all the way down to here. Let me change the color. You have to find the origin of this movement. And if you go back on this move, and you will find here is the start of the downtrend, here is the trend reversal. So you can mark this area as the origin of the price movement. And then here you can see it starts from here all the way down here. Then it starts to go up. It is a correction. And here in this area, you have another origin. You can mark it. For example, here is another origin for the next leg to the downside. So here, this area would be another supply zone for you. And here is another supply zone. And this is how you should look at a new chart to identify supply and demand zone. Okay, let's go on Bitcoin chart and try to see what's going on Bitcoin. So here we are in a weekly time frame on Bitcoin. Step one, spot the current price. So here we are here right now. So the price is here. And step two, you have to look back, look to the left side, and find the ERC candles. So here you can see this is an ERC candle, another ERC candle. This is, although this lower shadow is a little bit long, but still you can see the body of this candle is so strong. So we can call that ERC. In the coming episodes, I will talk more about the ERC candles. I will present you a few criteria, how you can identify ERC candles. But in this episode, just have this general idea about ERC candles. For example, this would be ERC candle. This one would be ERC candles. So you pass the step two, and step three is identify the origin of the price movement. So if you look to the left side, you can see here this area is the reversal area for Bitcoin. So we will mark it as the origin of this move to the downside. The first leg starts from here all the way down to here. Then you can see a period of retracement here, price retraced here. And again, it starts another leg to the downside. So you can mark this area as another origin for this move to the downside. Even here in this area, you can see another leg to the downside, and you can label it as the origin of this move to the downside. So this is for the supply zones, and how we can find the demand zones. So as for the demand zones, you can see, you should look for uptrends. So let me use this feature to go back to the charts. Okay, We are here. We are here. Here you can, if you look at the left side of the chart, you can see a move to the upside. It starts from here all the way to here, and then another leg from here to here. So if you go down, you can see the origin of this movement would be here. This area would be the origin. Let me change the color. And here we have another demand area. These long lower shadows is a good representative of a demand area. And also you can see a few strong ERC candles here, ERC candle here. So this is how you can look back to the chart to find the supply and demand zones. But why we are looking for supply and demand zones? When you identify these supply and demand zones, then in the future of the market, when the price approach these levels, for example here, when the price approach these levels, you can see how the price shows reaction. When the price approaching these demand zones, you should look for buying opportunities here. But in this case, you can see the market didn't give you any signals to buy from this area, and the selling pressure was so strong here, and it broke this demand area to the downside. But here, if you go back here, you can see when the price, after the price formed a demand zone here in this area, it starts another leg to the upside. And when the price came back to this demand zone, it showed a nice reaction, and it starts going up again. And yeah, this is the very important application of supply and demand zones. Basically, we should look for these areas to the history of the market. Then when the price approach these levels in the future, we can take advantage of these areas. Either we can start to sell our assets or start buying our assets. So this is supply and demand zones. In the next episode, I will talk more about supply and demand zones, and also I will talk about support and resistance and how to trade them, how to identify these areas more accurately based on the method I use for my personal trading. So please go to different charts and try to identify these supply and demand zones. Have a good time and see you on the next episode.